Every trader thinks that you need bigger moves to make bigger money. Oversized positions, wild targets, praying that one trade will win them for the month. And sadly, I thought that too. I used to load up big on every setup that I thought would make money, chasing trades after they've already made their move, and convinced myself that the bigger the risk I took, the bigger the payout I got. Then I found the opposite to be true. My best trades and my most valid trades are the boring as fuck ones. No ego, no panic, just simply numbers and my edge. I don't need to be right on every single trade. I don't sit staring at the charts all day. I take like 10 minutes a day just to trade. I don't touch my take profit. I don't touch my stop loss. Okay, this is all automated. It all works for me in the background. I've been trading Forex for 4+ years now, and this boring, repeatable process is exactly how I do it. Let me show you how it actually works. No setup means no trade. One stupid, simple system and process. Break a structure into a fair value gap, okay? That is my system. It is stupid simple, okay? Your system needs to be crazy simple and crazy boring, okay? If it's too exciting and you're getting nervous and excited when you're making losses and profits, okay, that's the wrong way to be trading. No valid setup equals a skipped trade, no matter what. Doesn't matter if it's, it looks great, it looks sexy, it looks like it's gonna win, okay? If it's not valid setup for me, doesn't fit my plan or my strategy, I'm skipping it. I'm not trading it. That's that, okay? That's final. Sitting on your hands is a position too. Being patient is a position in itself, okay? Not buying or selling is a position in itself. Here we have the consistent trader, okay? So the trader that takes valid setups, okay? And is a patient trader, doesn't risk too much, okay? It's just slow and steady, okay? We can see here, just continues moving up and up, okay? With, of course, some losers across the way, some break-even periods, okay, from this point on. But overall, we can see that it's in an uptrend and the equity is growing. Now we have the trader that wants to take every trade, okay? The wants to take every trade trader, thinking that they can take every single trade. They think that looks good. They're going to win every single trade. That's the quickest way to blow your account and the quickest way to be an unprofitable trader. You can see here some initial big wins, okay? Drawdown periods, big wins, and then some unreal drawdown periods. These kind of people that want to be in every single trade, okay, they've got FOMO, they don't want to miss a trade. This is what their equity curve will look like. It's going to be all over the place, no consistency at all, okay? And your peace of mind is not there. It's non-existent. Imagine being a trader where your drawdowns are this big, okay? Where you're losing heaps of money. Why would you not want to be this kind of trader where you've got small, consistent gains over a 12-month period? This is too hectic. It's too crazy. You'll struggle to be a consistently profitable trader that makes lots and lots of money, okay? Trade small enough so you can sleep at night. Guys, risking too much to the point where you're nervous or like you don't want to lose at all, that is a big no-no, okay? You will have no peace of mind. You will not be able to sleep at night. Don't risk too much, okay? Same position size every trade, win or lose, all right? It's fine to change once or twice a year, okay? Depending on your circumstances, but don't go from trading 1% risk to 5% risk, okay? Big no. Super inconsistent, you'll struggle to make lots of money, all right? Or you'll struggle to make money at all, I mean. Small size removes emotion from the decision. Think about it. If you're risking like 5% per trade, and you could be making $10,000 per trade because you're risking so much, your emotions are going to start to come into play. You're going to start thinking, okay, if I can make 10 grand every single trade, why don't I just take this next trade that's not valid, all right? Like it's only missing one thing from my plan, but I'm going to take it anyways because I know I can make $10,000, right? Wrong, all right? Wrong. Getting too emotional, you're letting your emotions play out. You're starting to deviate from your plan, okay? You're starting to deviate from your actual strategy, the thing that is actually making you profitable, the thing that is actually making you money, okay? Survive the losing streak and you let the edge play out. Too much risking at 10% per trade, okay? Your equity curve will look like this. You might have some great few trades, all right? You start going on a losing streak, you go down to zero, all right? You can't recover from zero. You can't make 10% return on $0, all right? So avoid risking so much and risk enough or little enough amount, okay, to let the edge actually play out. This is where you want to be. Small, consistent trading, okay, which is compounding. Month by month, it's growing, okay? Your account is growing. Not every month will be a winning month, of course, but to get the point here, this is small, consistent steps in trading, small, consistent months. Big swings and changing in risk is not compounding, okay? One super bad month, one extremely good month, one really bad month, another really bad month, break even, okay? Too much inconsistency. You're going to struggle to make genuine money and consistent money in trading. This is what you should be striving for, okay? This, too hectic, too crazy, too many variables going on here. Imagine your emotions seeing this, all right? One day you've lost fucking half your money. The next day you got it all back. The following day you lost a third, and then another third, okay? And then you're back at like your break even trade or whatever. And it sucks, all right? That's not the point. That's not what you want. You want small, consistent returns, okay? Too many big swings. It's too emotional, and it's just really not the right thing to do, okay? This is what you need to be doing, compounding with small and consistent returns. Now, you need to follow this process every single time, okay? No ifs, no buts, every single time. You have decided your risk and your process, okay? Well done, good stuff. Your risk is fixed, okay? So you're not changing it every single strategy, every single trade, sorry. No exceptions. Now you stick with it consistently, okay? This should be bolded and underlined. Consistently. You stick with it consistently. You have your strategy and your plan in check. You got fixed risk, okay? Now you let it ride out, okay? Because now you've got a few winning trades, you've got break-even period, you've got losing trades, you've got really good month, break even, another really good month, okay? This is what you want your equity curve to be looking like. And you've stuck out with it long enough to the point where it starts to make money, okay? Let's say this is the 12th month and this is 6 months, this is 0 months. From this point on, from 0 to 6 months, you made technically zero money because you've gone up and then you've gone back down, okay? Not ideal, but it's the way trading works. From 6 months to 12 months here, okay? Huge difference, big difference. You've let the trades play out, you let your edge play out, and you've started making serious money, okay? Your equity curve has actually grown a lot, okay? So that's what you need to be doing. Follow the process, okay? Your strategy and plan, fix risk, do it consistently, and let the edge play out. This is what letting the edge play out looks like. Now you've got your plan, you've got your process, set it and walk away, okay? Entry, stop loss, and take profit, they are placed before anything else, okay? You don't change it, you don't maneuver it, all right? There's really no need. There's no need to check every single hour as well. If I'm in trades, I don't care, okay? I don't check it every hour. I check it maybe during the day once, okay, just for random sake. But I'm not checking it every 20 minutes. I'm not checking it every 30 minutes, okay? There's zero need for that. Why? Like when you start checking, you're putting, you're realizing that your emotions are in play. You're seeing if you're going to be losing money, okay? You're seeing if you're going to be winning money, all right? If you just leave it and you leave it until the next time you check the charts, you'll be better off, okay? You got to think of it as a passive, autonomous way to trade, okay? Less screen time equals more consistent decisions, okay? If you're staring at the charts all day, you're giving yourself, like you're just allowing yourself more opportunity to start fucking things up, okay? If you're staring at the charts and you realize it's getting close to your stop loss, you might think, I'm going to stop out now. Might as well just save a bit of money, okay? I'll save $50, $100. But then that trade reverses, okay? Like, let's say this is your entry, okay? You get tapped into your entry and then your stop loss ends up around here. So at this point you think, yep, fuck it. I'm going to cancel the trade. Okay. I'm going to put my stop loss in. And then you see the trade end up hitting your take profit. Okay. So what could have been a winner is now a loser, okay, because you've interfered with your trading. If you just left this, okay, you just left this here, all right, you're getting close to your stop loss, but you're not even checking, so you don't even care, or you don't even know. You see the trade hits up here, okay, and then you get an alert saying you've hit take profit, and it's a passive, boring way to trade. Okay, that's ideal. That's the ideal scenario. And you're checking the charts all the time. You're going to always be stressed. You're always looking at the negatives and potentially the positives, obviously, in your trading as well, but continuously checking it, especially if you're in red and if you're in drawdown for a few trades, okay, it's not ideal. You're always going to be stressed. Be a relaxed trader. You will find so much more peace of mind just checking the charts only when you need to, not checking all the time, okay, not caring about what the outcome is. This is your ideal persona for trading. This is what you want to be like when you are trading, okay? You're fully relaxed. You don't give a fuck, okay? You're not always stressed out, all right? You're relaxed, you don't care, you just check the charts and trade your plan. That's it. Win, loss, doesn't matter. You know that over the long run, you will make money, okay? So be a relaxed trader. Following on, judge the process, not the outcome. This is crucial. This is very, very important. A correct trade can still hit stop loss, okay? Drill that into your brain. Drill that into your strategy and your plan. Just because you hit a stop loss doesn't mean that a lesson needs to be learned, okay? A correct trade can still hit stop loss. It can hit many stop losses and it will hit many stop losses. Rules followed is the only win that matters. That's what judging the process looks like. Doesn't matter the outcome. Are you following your rules? Are you following your process, okay? Because if you hit a winner, okay, but you're not following your process, You're not trading consistently. And it might be a winner now, but tomorrow you'll have 10 losing trades in a row because it's not a part of your plan and you fuck yourself over, you lose a lot of money. It's not ideal. No one wants that. So rules followed, it's the only thing that matters. Are you following your rules every single trade? If you are and your strategy has an edge, you will make money, okay? Simply put, you will make money. Maybe not in 6 months, okay? You might have 6 months of shitty trading conditions, okay? But those next 6 months are amazing, all right? And you stuck with your rules, you followed your rules, and you've been rewarded by it. But if you've traded crazy and sporadically and like with no consistency at all, in your first few months you've made a lot of money, okay? The next few, you might lose it all, okay? Because you're not trading randomly, you're not trading with consistency. Per trade, okay? You can see here, win, loss, loss, okay? But then you look at the monthly trend, doesn't matter. These individual trades don't really matter, okay? You can see monthly, you are still making money, okay? You're still gaining positive equity. You're still making a positive return. Doesn't matter per trade, okay? You can see here, win, loss, okay? Let's just say there's another bigger win here as well, which covers up positive month, okay? Even with 3 losers and then 3 winners, you've still made a positive month depending on your risk to reward. Okay, this is the thing you should be looking at. Who cares about this? No one cares if you lost a few trades. Okay, no one gives a fuck. You shouldn't give a fuck. What you should be looking at is month on month. How are you doing? Are you making money month to month? Because obviously slow periods are fine. You can be losing in a few months. These 3 could all be losing, and then these 2 wipe it all out and make you profit even more. Okay. So understand that individual trades do not matter, okay? Simply following the rules and looking at it over a longer period of time, that's what matters. Track your numbers and not your feelings. No one cares about your feelings. The market doesn't care about your feelings, okay? They only care about statistics and numbers. Every trade logged, win or lose or break even, every single trade you make, even if it's a fucking mistake, okay, you entered and you exited straight away, just log it. For purpose sake, just log it. Everything needs to be logged. Win rate and risk reward come from data. Being confident in your strategy comes from data, okay? Your next execution, your next valid trade, it comes from the data that you've built up, okay? Confidence comes from evidence, not emotion. You don't feel confident because the trade looks good. You feel confident because the data looks good. Your data is clean. It shows that you're profitable, okay? That's where you get your confidence from. Not because, oh, I think this trade looks good and I'm going to take it. All right. Comes from evidence, comes from data. Look here, we've got 1 month here. We have only 4 wins here. We have 7 losers here and then 1 loser there as well. So 8 losses and 4 wins. During these 7 losing streak, okay, you probably feel like shit. No surprise, especially if you're trading for the first time. Me personally, I don't give a fuck if I'm in a losing streak because I know that if I follow my rules, I'll eventually be profitable. I'll eventually make money, okay? Like it's coming. It's simply just statistics and that's it. And this month, okay, so these 7 trades, you feel like shit and you feel like you're going to lose all your money and that's that. And then overall in this month, even with this 7 trade losing streak, you're up 4% for the month, okay? Using this data. That's the beauty of it. That's tracking your numbers, okay? Because even though you've felt like shit during this period here, where you've lost 7 trades in a row and you could be losing thousands of dollars, at the end of the month, you know that you were patient, you kept taking valid trades, valid setups that met your plan, and you ended up positive for the month, okay? These winners are coming. So don't worry about your feelings. Your feelings here doesn't fucking matter at all, all right? You shouldn't even have feelings here. This point doesn't really matter, okay? 7 losing trades in a row, who gives a shit, okay? You follow your plan, you know that eventually you'll make money, okay? That's why you got to track your numbers and not your feelings, because the market at the end of the day, it is all numbers, all right? As soon as you start putting emotions into it, you're going to fucking struggle and you're just going to struggle in general, okay? You got to be a numbers game. It's a boring way to trade, but it's the only way to trade. It's the only way to trade profitably, okay? That's that.